The countdown for filing income tax returns or ITR for financial year 2023-24 has now begun. The last date to file the ITR returns is 31st of July. But what happens in case you miss the ITR filing deadline? Well, if you fail to meet the deadline, you can still submit a late return, but you will have to pay a penalty or a late filing fee. Now, this fee varies depending on an individual's income slab and is subject under Section 234F of the Income Tax Act. So, for instance, the maximum penalty for taxable income up to 5 lakh rupees is 1,000 rupees, and the maximum penalty for taxable income exceeding 5 lakh rupees is 5,000 rupees. Other than paying a penalty, there is one more implication of filing a belated return. The taxpayer is automatically assigned the new tax regime which was introduced in 2020. And remember, even if the new tax regime offers lower tax rates, it puts a limit on deductions and exemptions. Therefore, if you file a late ITR, you automatically forfeit the option to choose old tax regime. However, in certain cases, filing an ITR after the due date is allowed. Well, let's take a look at such instances. For individuals and businesses whose accounts require auditing, the deadline has been extended to October 31st. The Income Tax Department grants an extra 3 months so that concerned individuals and businesses can complete their audit with a recognized chartered accountant before filing their ITRs. The businesses that involve international transactions are given an extended deadline of 30th of November. It is because these businesses typically need extensive analysis and documentation. The businesses that engage in specified domestic transaction, an extension is granted. This is due to the requirement of such businesses to undergo detailed reporting and compliance procedures. Now, what if you miss the belated return deadline too? Again, you can still file an updated tax return. An updated tax return can be filed within 2 years from the end of the relevant assessment year. For instance, for an updated tax return for assessment year 22-23 can be submitted until 31st of March 2025. Two cases emerge here. If you file the updated return within 1 year from the end of the assessment year, an additional tax of 25% on total tax and interest will be levied. And if you file after 1 year but before the 2-year deadline, an additional tax will be levied to the point of 50% on the total tax along with interest. Well, these are some of the scenarios. However, with a few more days left to the July 31st deadline, it's always advisable to file the ITRs on time and stick to the deadline.